Hello everyone, welcome back to this channel, Trading Life Masters. My name is Zicheng and today I will be revealing my momentum trading strategy, which is easy to use and as well as easy to identify as well. Before we start, I hope everyone can do me a favor first to like, share and subscribe, as it would act as a motivation for me to continue making videos. Let's start today's session on momentum trading strategy. What exactly is this momentum trading strategy that I'm talking about? Let me tell you what indicator I'm going to talk about. It will be the RSI, which is the Relative Strength Index indicator. I'm sure you are very familiar with RSI because most of the beginner traders start with RSI, but I'm very sure that you are using it the wrong way. What I've seen beginner traders do is that they have been selling when the RSI is at overbought, and they have been buying whenever the RSI has been at oversold. This is definitely a wrong way of trading, and you will realize it doesn't work. Although it might work, for example, in this situation it might work, but in this situation, look, it was at an oversold level. And if you proceed to take some buys over here, which is this area, what happens? It will proceed to hit your stop loss. That is why what I'm teaching here today is not buying at oversold and not selling at overbought. So how are we going to use this RSI indicator? But before we jump in, let me first introduce you what is divergence. Divergence is the strategy we are going to look at today. So let me first remove everything and let me explain what is divergence. Divergence is when, if the price is going up, for example, this is the price chart, but on the indicators chart, it is showing a down move. So this is what we call divergence. Let me type it out. So this is divergence. Let me repeat it once again. Divergence is when if the price chart is moving upwards, the indicator is moving downwards, and vice versa. If the price is moving downwards, indicator will be moving upwards. So in simple words, divergence simply means the opposite. If price is up, indicator down. Price is down, indicator will be up. So that is divergence. So how are we going to use this divergence in the chart? Firstly, we'll choose RSI. Now, it does not mean that you must use RSI for a divergence trading strategy. I've seen people using stochastic, using volume indicator. It works as well. But in this video, I'll be going through divergence using the RSI indicator. So let's move on. So we can see we have RSI here and we have the price chart here. So in this case, this live chart, this is when price is moving. We can see the price is moving up and the divergence is moving up as well. So there's clearly no divergence. But if you notice, if you go down clearer, you'll notice a divergence. What do you see here? You see price is making a lower low. Price is making lower low. From here to here, the price is getting lower and lower. But in the divergence, what do you notice? We notice that the price is heading up. So this is when divergence has occurred. Let me repeat once again. Price is making a lower low, but in the RSI indicator, it is showing a higher high. So this is what we can tell, divergence. A divergence has occurred at this moment. And how do we usually use divergence? We use divergence to spot reversals. So in this case, we have seen the price reversed after the divergence has occurred. So we were moving down at first, and after this divergence occurred, price reversed up, and this is when divergence have played out perfectly. But does that mean that we can trade divergence at any level or anywhere we spot in the chart? The answer is no. So what are the key criteria when it comes to trading divergence? We have few types of divergence. If you can spot the divergence at the lowest level, for example about the 30 level, that would mean it will be a good divergence. But if you spot any divergence in between the 50, it will not be considered as a good divergence. So in this case, this is actually a decent divergence because look, the divergence occurred at a 30 level, which is at an oversold level. So remember this, to trade divergence, you only want to trade if the divergence is found in the oversold level or in the overbought level. Don't worry, we'll jump into more examples and look at how those divergences successed and also how it failed. This is an example of a failed divergence. As you can see, price is making lower lows here, but in the RSI, it is making a higher high, this point and this point. So do you notice the divergence? But what is the problem here? The divergence did not occur at the oversold level. Look, price was heading down. And after we have spotted a divergence, many traders will proceed to place their long position. And look what happened. In fact, it did not go up, but it went down. One of the reasons was because the divergence that you have spotted, it did not occur in the oversold level. Yes, although the first point occurred in the oversold level, but the second point wasn't. The second point was very close to the 50 level. That is why this divergence is not valid. Let's have a look at another failed example of divergence. In this case, price is making a higher high. Price is making a higher high in this region. Now we check the RSI. Look, RSI from here to here, it is making a lower low. So in this case, we can say that there is divergence here. But what do you notice? This divergence occurred not at the overbought level. It was not at the 70 level. It occurred within the 50 and the 70. So that is why this divergence is not valid. And what happened? Price was moving up and the divergence happened. The price did not reverse. In fact, it continued up to the upside. So that is why it is very important to spot divergence in the key levels. For example, either the 70 level or even better would be above the 70. And if it's the oversold level, either at the 30 level or below 30. Let's have a look at some good examples. As we can see here, price is making higher highs here. Price is making higher high. Now let's go down here. Look, but price is making lower lows in the RSI indicator. And what do we notice? The divergence occurred in the higher level, which is between or above 70. So it's a very good divergence because it occurred at an overbought level. So what can we do? We look for sales with some proper confirmations. For example, the bullish engulfing, place our stop loss right above, and you would have been in how much profit? Let's see, a 1, 2, 3, 5 RR. So that is why it's very important for you to be patient and wait for the right divergence when it comes to trading divergence. Let's have a look at another good example. In this scenario, price is making lower lows on the Euro USD. But what do we notice? Let's check the RSI chart. But in the RSI, it is making a higher high. So we can safe to say that there is divergence. But ask yourself, is the divergence in the key level? In this case, yes, it is. It occurred from the 14 level to the 30. So it is way below the 30. So I say that this divergence is valid. So what do you look for? You look for buy entries. For example, some buy bullish engulfing. Then look what you have gotten. It depends on where you want to take target. For example, if you target the latest resistance, you could have gotten it. So a buy entry here, a 6.89 risk to reward. But now everyone, in this video, I have not taught everyone how to have confirmations in entering divergence. What I have taught is how to identify good divergence. But don't worry, Another video, I'll plan on what are the candlestick confirmations, how to add quality to your trades to make it a better trade or a higher probability trade. Remember this, there's no 100% in trading. The only thing we can do is just increase the probability of the trade winning. However, it will not be 100%. So I hope everyone can keep in mind, because there is no 100% in trading Forex. If you see anyone talks about 100%, I would say you better run away, because it is not real. So everyone, I hope this divergence video can help you identify good trading opportunities, and of course, this can be added to your current trading strategy as well, because if this occurred, there's a very high chance that it will reverse. But do not solely use divergence to trade, because it will be very risky. So this is something that you can add to your trading strategy, but if you are not sure how you want to use it or how you want to improve it, I first suggest you to try backtest in these divergences without any extra confirmation, and let's see what results you got. So make sure you subscribe, stay tuned for the next video, as I'll show you how to get extra confirmation when it comes to trading. That is it for today's video on momentum trading strategy. If you have any questions, feel free to comment down below. Besides that, if you are interested in my daily live streams, you can head over to trading.live, where I do educational content every single day, and as well as daily chart analysis. Thanks for watching till the end, and please do not forget to like, share and subscribe. See you the next time.